traders of the past, they tend to trade in a trading pit where if you watch movies, it's some guy in the middle of the pit and it's surrounded by a lot of traders, and the order flows come from the side of the pit, from phones to the people in the trading pit, right? So with that, they can the really good traders, they understand the psychology of markets. They know where's the flow of money coming from, right? They know how prices are going to react to certain data releases.
So V, tell me, why did you set up track record?
Very good question. So track record was started because banks and institutions were asking for training for their traders. So professional traders needed a refresher, as well as more training on how to take risk and how to trade with a precise risk framework, right? A structured risk framework. So I got into that, and then I found that the retail sector has a big gap in knowledge between Wall Street and, I say, Main Street, right? So retail sector, there's no available training that tells them truly what trading is all about. You know, most of the trading courses that I've come across, they're mostly theoretical knowledge about trading, not practical knowledge about trading. So this is why we started Strike Record, and then we ventured into training retail traders as well. Technical analysis give you a structured and objective way to measure and also to understand the psychology of markets. What do I mean by that is that it used to be, you know, if you read books, accounts of successful traders in the past, Reminiscences of a Stock Operator, for example, is a great book, right? I'm sure you've read it. You know, traders of the past, they tend to trade in a trading pit where if you watch movies, it's some guy in the middle of the pit and it's surrounded by a lot of traders, and there's a lot of noise, and the order flows come from the side of the pit, from phones to the people in the trading pit, right? So with that, they can the really good traders, they understand the psychology of markets. They know where's the flow of money coming from, right? They know how prices are going to react to certain data releases. So they have that advantage in that, right? They remember, they have experience, they can hear the sound, they can see the emotional expressions of the people around them as market goes against everybody, for example. But that's lost to the guy with a mouse and a screen at home, right? You don't know what's going on. You don't know what has happened in the past. You have zero experience. You have very, very little memory of what happened previously, right? So you need charts to at least tell you what happened in the past, and the patterns and the indicators all help you identify similar situations in the past, so that you can say, okay, what are the probable outcomes going from here, given the similarities. And it measures, it gives you a picture of psychology behind the markets, because fundamental information drives prices, right, in the longer run. But in the shorter run, there's one, and also in the longer run, in fact, in all of history of markets, right, the common factor is that it is human participants, right? So human beings are reacting to prices, reacting to news, reacting to what they know, reacting to what they have, where prices have come from, and where the emotional greed, fear drive prices. So technical analysis helps you chart that, right, and gives you a guide as to what are the probable outcomes going forward.
So V, tell me about technical indicators, right? There are thousands of technical indicators out there. So which one actually works, or which one the professional traders actually use consistently?
Again, that's a question that we get a lot. You know, there's MACDs, RSI, right, Bollinger Bands, whatever, you know, parabolics. You know, all these names, people are very confused, and they're very fascinated with this. The more complex sounding it is, the better it is. They're always thinking, oh, this is the holy grail, the secret of trading that I've been missing out, right? Suddenly it's revealed to me. It's clearly not that, right? Every indicator was created for a reason. The creators during that time, they were in different market regimes or market environments when they decide to create the indicators, and because of that, indicators only work in the environments that they were created in, right? So if you, for example, it was in the trending market, you will find that the people living through those trending markets, they'll come up with ways to figure out what's a way to ride the trend, right? When it's in the range trading market, it's much like FX for the longest time now. you will have people coming out with indicators to tell you, oh, where's the extreme of the range, where you want to sell, it's gone up too high relative to the mean, it's gone down too low relative to the mean, to the average, and you want to buy. So there's either range trading indicators or trending indicators. And to understand what each indicator is designed to do helps you a lot, right? Most people don't even know. They just know the name, they've been taught, they've read in the book, and then they just use it religiously across all environments. Then you'll find the problem that you have, right? Where it's inconsistent. Sometimes it's just so frustrating. You just keep losing money because you're using an indicator that is not supposed to be used in this environment. Right. Because the difficulty is to figure out what environment that we are in, right? And it's almost like a catch-22. Some indicators will help you tell what kind of environment you're in. For example, moving averages will tell you, it's a trending market. So either you're long or you're neutral, but you don't try to sell a trending market because it's the trend is your friend, right? Everybody's here heard of this thing. But to better illustrate my point, let me show you an example also, and then we can discuss it further. So we were talking about indicators, right? So many of them so complicated. Which one to use when? I'll show you. We'll talk about one that very commonly used indicator, MACD, where don't worry about what it stands for. Just take its MACD. It uses moving averages and to figure out when it's a time to sell, when there's a divergence or convergence, meaning price is moving too high but the momentum is fading. So it's mostly used wrongly by a lot of people. Right? Not just there are many indicators used, most indicators, the ones that are popular at least, are used wrongly. Right? And the reason is because they don't understand, right? They do not understand what's the reasons behind the creation of these indicators and how to use it. So it's become almost common knowledge, which is wrong, that if you see prices making new highs, continuously going higher, but momentum is going lower, then they say, oh yes, there's a divergence, so we need to sell. So they use the histogram as an indication of in momentum, right? So at this price, momentum was high, and at a higher price, momentum was low. So the theory says, okay, they're making higher prices, but momentum is waning, so there's less strength and impetus behind this move, right? So it tends to go further. Of course, after the fact, you can still be correct sometimes because technical analysis is not 100% correct. It's probability, probable likelihood of success is higher. It doesn't mean that it's 100%, right? So there's one thing you must understand: there's no 100%, right? Anybody tell you there's 100%, they are just making it up or they're just doing it wrongly. Okay, so from using this histogram, is the momentum is waning, but actually it is the wrong way to use it. The creation of this MACD is the original user who created this. He was not looking at the histogram. The histogram just happens to be here, as it says, the MACD line and minus the signal line, right? Because here's the formula, but you don't need to worry about the formulas, right? It's pretty much standard. But original usage of this indicator is they're looking at the green line, they're looking at the MACD line. So it just so happened that the MACD line was also going lower, right? See, you got the move correct, but if you're using the histogram, you also can get the move correct, but you're wrong. So sometimes, then when the situation comes when this thing is not waning, or this thing is waning, but this green line doesn't show that momentum ebbing, weakening, you will think, oh yes, it's a bearish signal, so I need to sell. But actually, then you'll be wrong, and then you lose money, and then you'll be confused. You ask, oh, how come it used to work before, it doesn't work now? And the reason is because you didn't get the fundamentals of the indicator correct. You don't understand the reasons for it, and you're doing it wrongly. Using an example like this, you see for here, you can see you would have missed the move, right? Here the price is high, it's here. The momentum, if you're using the histograms, it's not much, it's negative, and then this higher price, or the histogram is on the positive side. So you think, oh, actually, price should go higher, but then you put on a trade for prices going higher, then it went down further and you lost money, right? And you ask yourself why. It's because the green line, the one that we spoke about earlier, is going down, right? It's not going down, it doesn't make a new high, right? It doesn't exceed this. Of course, this sounds a lot complicated if you've never used MACD before, but if you're using MACD and you're using it wrongly, you recognize instantaneously yes, you have been using it wrongly. And you won't be alone.
Right.
Many people in the world who uses MACD, we've seen influencers that uses technical analysis, they make the same mistakes as well. And the reason is because it's a commonly accepted truth, right? Commonly accepted assumptions that they are using the histograms to measure the MACD, but it's actually not.
Very interesting you shared the nuances of how MACD actually works, right? Because I think around me, I'm being surrounded by a lot of my friends who are, most of them are retail traders. I see them using like MACD or stochastics on their phone, right, on their MetaTrader app, and none of them have actually had any success using these indicators. And I guess it's because they don't truly understand the nuances of it and how to use it consistently to get trading results.
Yeah, consistency is important, right? Because they're being fooled by randomness. Right. Sometimes it's right, sometimes it's wrong. They don't understand why, right? It's interesting that you brought up stochastics, because I can show you another example where people use MACD and stochastic wrongly, right? Because they assume the theory is about the same, but it actually is not, right? You have to see what goes into the formula. At least you don't need to remember the formula, but you should know what is being used, right? Then you can use the indicators correctly. Yeah. Just now we were talking about lower prices, and then it goes higher, but then momentum is waning, so you know that these prices cannot be sustained, right? So you follow by a down move. Another example of where people go wrong, where using MACD wrongly, before we talk about stochastics, is this, right? Is that if you look at this, with prices here, then it's gone higher. Yes, you see it's made a new high, and then you see, oh yes, the green line, as I said, it's going lower, so there's bearish divergence, so it should go down. Of course, then you sold it, you go down, you think, yes, I'm a rock star, I made a lot of money, but actually you've used the indicator wrongly, because there is actually no bearish divergence in this chart. And the reason is you're looking at close, right? Because in the formula of MACD, they do not use the daily highs or the daily lows. They use it open and close. They use it close to calculate the indicator, right? So without a higher close, there is no higher highs, right? No higher close, right? So there is no bearish divergence. Of course, it happens to be right, but you're right for the wrong reasons. And then there will be many times where you're going to be wrong because you got it wrong in the first place, right? So this is MACD. They make a mistake of thinking the highs during the day matters for divergence, but it doesn't, right? And this contrasts this with so for example here, this was a close, right? It's not exceeded by the close of any bars, so there is no divergence. But let's just say we're talking about using stochastic now, because you brought it up, right? So again, if you're thinking, okay, now I learned that part about, because now you're using a line chart, because line charts are only using closes, right? There's no information about highs or lows of the period. So you think, oh, there is no divergence, right? Clearly there's no divergence. Although momentum is waning using stochastics, there is no divergence. So prices can still be around here for a while. But you're wrong, because stochastics uses highs of the day and lows of the day, right? So you see there's a high and you made a higher high, but you closed lower. So there is a higher high, and momentum is waning, and as you can see, prices fell after that, right? So if you were using stochastic wrongly, you would have missed this move. You say, okay, there is no divergence, let's not do anything about it. But if you used it correctly, you will find that yes, there is divergence, right? If sold, you make money. Of course, this is the case where you miss a big move because you were using it wrongly. Previously, I was showing you got a move right because you were using it wrongly. What this means is sometimes you get it right and sometimes you get it wrong. It's just randomness, right? You're not doing anything right at all. You're just using it wrongly. So this, as you said, is the problems that faced by many of your friends who use indicators where they don't understand what it's all about, right? So they have success, but for the wrong reasons, and then they have setbacks, and that's for the right reasons because they're using it wrongly.
I think by you explaining it on a fundamental level, as you said, it's dynamic, right? I think the problem or the issue that a lot of people have is that they take a lot of patterns as static things, right? And they try to apply it to every situation. Every situation is different. So I think by understanding it from the bottom up, it helps you adapt to every situation and ensures your consistency as a profitable trader in any market situation. Right. Right, so Vee, the gist of what you actually shared with me, or what I got, is that the only consistent thing that retail traders do wrongly is to use indicators wrongly, right? And that is why most of the time they cannot find any success in their trading. And I think what's interesting that you shared with me was that Track Record actually curated a technical analysis course to right all these wrongs. So please tell me more about this person who's teaching and
Yeah,
why he did this.
so I tracked down this guy, Greg Tan. I knew him from many years ago,
Right.
from a meeting that I had when I was in a hedge fund. He's been in the business, in the financial business for 30 plus years, 38 years, almost
Right.
40 years. And for the last 20 years, he was a technical analysis expert at specialist at Bloomberg, right?
Right.
So Bloomberg has professional terminals where they sell to all the professional traders in institutions, banks, hedge funds, and his job was to go to meet all these professional traders who have questions about technical analysis. So
Right.
he'll teach them how to use technical analysis correctly, use the tools that Bloomberg provide, charting correctly, and use it even better, right? Improve the usage of it. So there are many things. He truly knows everything about it. Not everything. We say he will know almost everything there is to know
Right.
about technical analysis, right? Because that's his job. He's been doing it for the longest time. And I met him in a training. It's almost 17 years ago now when I was in a hedge fund.
Right.
We get to call the specialized trainers to come to teach us. And I met him that one time, and I remembered him from there because he opened my eyes to how powerful technical analysis can be when you use it correctly and you understood it, and you understood why that the indicator is being used, why the chart pattern is so significant. And I did not forget. So in trying to curate this course, I wanted the best person I know to do this. And the primary reason is not just that he knows, right? There will be people who also know technical analysis very well, but his talent is that he is able to break down the complicated into easily understandable concepts, right? So for example, all these instances where people are using it wrongly, the examples I brought up during our conversation,
Right.
I got it all from him, right? It's amazing. Even the most simple concept, many people get it wrong.
So yeah, Vee, it's great that Track Record actually curated someone with Greg's background, institutional background, to teach this in the retail world, right? Because when I first started out 8 years ago, there was no such person in the retail space, and I spent many years, a lot of money, learning from retail speakers who are actually speakers and not traders, learning from books, right, and spending many years going around the wilderness, right? And I think that this guy seems to have figured it out, and I would think that if retail traders have the opportunity to learn from someone like him, I think it's going to shave off a lot of years for them.
Yes, you will save a lot of time going around the wrong
Right.
paths. You get straight to what are the essential concepts, what are the charts to use,
Right.
what are the indicators that are important to
Right.
monitor, and what environments they work in, why are they created, how do they help you make money, and then more importantly, after that, you have to have a trading plan. I think many people are stuck at, okay, I recognize the pattern, so what now? What's the trading plan?
Right.
You need to understand risk reward. So you learn about track records, risk reward, risk framework, structured such that you can know. Doesn't matter how much capital you have to manage, you will manage it in a fashion that will lead you to long-term success, right?
Right.
Minimize your losses, maximize your gains. Yeah.
Yeah, and so on that, as a retail trader, I think a lot of questions people will have is one day enough to learn all of these things?
Well, of course, you're going to be learning so many things. It's very difficult to put into practice if you just go home after that and then you're left on your own.
Right.
So our solution to that is that you will be part of our community. You'll be placed in our private chat forum where Greg is also on it, and various other traders which have joined our community through the years. Some of them are professional traders, some of them are part-time traders, but you can discuss the concepts, and Greg will be online to answer on a daily basis any questions that you have about the concepts that you have learned, right? And if you find that even still not enough, of course, you will be lost, especially at the beginning. Some people will be, not you, but some people will be. Greg will be producing on a regular basis because right now he's trading. He wakes up early every morning to look at charts. He charts everything. He even charts the food that he eats, the calories that he he consumes every day.
Right.
So he on a weekly basis and on a very regular basis, he will come up with reports, technical reports that talks about what he thinks about each market, right? And before looking at it, you can look at the charts ahead of time and then compare yourself with what he's concluded, and then that will help you become better on a daily basis, right? You have an expert to compare your notes with, right? To see, yes, you're on the right track, or you're completely still lost, right? But it's I think a one-day classroom, a few hours, or reading a book, it's never enough. You have to put all this knowledge that you have, that you gain, and to put it into practice in actual day-to-day trading situations, doing real trades, and figuring out how to do this over the longer run. And if you have someone to guide you along like this, you're definitely going to be profitable over long periods of time. Right? Short term is going to be a learning process, but at least you now know you're on the right track. I think the most difficult thing that retail traders face is that they never know, is this the right track that I'm on, right?
Right, so thanks Vee for sharing with me Greg's Technical Unleashed program. I believe that it will actually help traders become a lot more successful in their endeavors.
You're most welcome.